Hey everyone, hope you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do a commodities update, catch a little bit of everything. I'll be switching back and forth between specific updates, kind of the overall updates. They capture, I think, the most. A lot of these things don't change that often. Doing them every day gets kind of monotonous. There are some times where some companies diverge from the sector, but for the most part, the ETFs cover what the entire sector is doing. So let's dive in here. I'll give you my financial opinion on the commodity sector. I'm just kind of touching on a whole bunch of different stuff, precious metals, and I'll give you my financial opinion. So we've got the dollar up here. I'm in the dollar bear camp. All right. I know in the short term it's going higher. I get it, but I think eventually this is going to roll over. Is this the rollover that we're getting? I'm not going to go that far, but I think eventually it's going to roll over. It's going to go lower for whatever reasons. It seems like whenever we get in these expansionary phases of real estate, at some point, the interest rates go up. I think that the emerging markets and some of the other areas are more sensitive to rate increases, and the dollar becomes less favorable over time. That's the way that I look at it, my paradigm. So I think eventually the DXY will head lower. But there's a lot of things going on with this cycle where it may not head lower. I've just been looking to see if this thing is ready to break to go to the downside, where people don't prefer the dollar and dollar denominated assets, and they start dumping it in favor of commodities and precious metals, which are kind of the safe havens in these market conditions with high inflation, increasing interest rate environment. But it almost always seems that the dollar benefits in the short term as people liquidate assets and move to the dollar first. And we still have recessionary fears out there, which are getting priced into this whole thing. And we've got the 10-year yield here. I don't know if this is, we've got a nice big bearish engulfing here, which means we're going to probably head lower in yields. We do have a pattern that looks like it's kind of a head and shoulder type pattern where we could head lower. This here would be bearish. Basically, what this is saying is that oil could pull back here in the short term. And I do agree with that. In the fall, between summer driving season and the winter, we usually have a lull in oil demand and natural gas demand and so forth. And I don't know if the Federal Reserve's in here messing with the 10-year yield. I don't necessarily know that. But this does look bearish, like it wants to pull back. It could be recessionary fears. There are a lot of manipulators in the market, mainly the Federal Reserve, playing with stuff. We've got strategic petroleum reserve releases. We got all sorts of stuff going on. But this does look bearish, like it wants to go lower. Conversely, that means bonds want to go higher. And this does look like it is strengthening. We've got a bullish engulfing here, and then we have another strong day today, looking like bonds want to go higher. And what that means is that the recessionary fears may be outweighing the inflationary fears. And I think this will just be a small pullback in a larger inflationary move. So I do think that we could weaken or soften towards the fall and end of this year, and then regain strength later. Commodities pulling back a little bit. We're still above the broken down trend, but we've pulled back a little bit. Precious metals, we've got a weaker dollar, weaker 10-year yield. That's usually good for precious metals. Precious metals are putting in a bullish engulfing pattern. That's saying that we are most likely want to head higher here. That looks very bullish. Hammer candlestick, nice big up day, finishing strong, and that looks good. But I do think, this gold price is an indicator of inflation, and perhaps it's being manipulated, perhaps not. But buying physical is a spot that I like to be. And silver is also throwing in the hammer candlestick. We've got a broken down trend. This looks like it wants to go higher. Silver's looking good, and then platinum's also looking good with the bullish engulfing, broken down trend, looking good to go higher. I actually did buy some more physical platinum at the beginning of today because it was on the line. And I said, screw it, I'm going to buy some more. And that's how I roll. If the ratios are good and your timeline and time frame is long, I've got no reason to sit here and second guess it. I have faith in the ratios. I have faith in what is cheap, and I have faith in the market conditions that eventually will come to push and drive this stuff higher. XEU to gold ratio, it's basically flat. We're right against this trend line. We have not broken it yet. Looking at GDX, GDX is firming up a little bit. We all know that it's good to firm up sometimes here, but we have not broken this downtrend. We got to break it. That's the first step. SILJ also below the downtrend line. We got to break it first. We got to break it before I can say that I'm totally bullish on it. But the overall sector looks really good. We've seen some very good bright spots in these stocks here and there. Overall, though, we're still in downtrends. Crude oil getting hit today. They're saying it's the Libya thing. I don't know if that's the case or not. But we're going down here in the short term. Of course, we're releasing barrels out of the Strategic Petroleum Reserve. They're doing everything they can to basically push this thing lower. This also has an impact on the Consumer Price Index and Producer Price Index. Of course, they need to manipulate this crude oil futures lower. They got to, if they want to lower the inflation rate. They need money they need money to stop going into this stuff. I am pretty sure they're trying to manipulate this lower with the Strategic Petroleum Reserves worldwide. And right now, they are successful at holding it down. Natural gas is getting a little, I call this a bloody, it's a down day today. Momentum was flat, basically, and it's a bloody nose. It's a big candlestick with a little down day next to it. Little bloody nose. That's usually a continuation pattern higher. So I still like natural gas. Will this pull back? Will this basically come up, pull back, and come back? It's probably likelihood with the fall coming up at some point to do that, but it's not necessarily in the bag. If we get the liquefied natural gas, Freeport LNG facility back up and we start running again, I think this is going higher. So rather than trying to play the short-term little movements and trying to get that all right, which is very difficult to do, I just stay long and buy the pullbacks. That's all I'm doing. It's that simple. Why is it that simple? Because it should be that simple. Don't try to overcomplicate things. XOP, yeah, you know me, down today, but it's not really a reverse candlestick in the making here. I mean, this here doesn't look too bad. We've got nice, big, bullish candlesticks here. Someone's buying it. Someone's believing that oil and natural gas is of good value. We just had a small down day today. And obviously the whole sector was down today. They all move roughly in the same wavelength. OIH, energy service companies, they're also getting hit. It's a hammer candlestick. They got hit lower, but buyers came in, bought it back up. And I think we might do some sideways movement before heading higher. This does have a lot of downside momentum. So we usually do a little bit of sideways action before heading up. That's pretty normal. And we're right at that support line right now. And the whole sector was basically down there. Looking at uranium, this is the Sprott Uranium, Sprott Physical Uranium Trust. Going on the dailies, we do have a hammer candlestick. That looks, we've got support here. We used it as support. We came back up. And URNM is getting a little bit, we can pull it up here. That also has a hammer candlestick. It is, we'll see what happens here, guys. This is a little bit bearish. If it were to finish a little bit stronger, but again, we've broken out of the downtrend. We're above support. We might have a down day or two, and then we'll see what happens. The short term's always the hardest to read. You'll hear me say that multiple times. I know people think they can read the short term, but you know what? If they can, they should be billionaires. And you know what? They're not, because they don't know how to read the short term. Warren Buffett thinks it's basically worthless, and Peter Lynch, within a 2-year time frames, it's a coin toss. That's what he thinks. These guys are the most successful investors in history. But I look at the big long-term fundamental picture. All this looks really good. I am remaining long. CCJ, just to show that's not a bearish candlestick really there. I mean, it's down day, but there's nothing too bearish about it. It's not a bearish engulfing where you might see this and you have a little bit lower move. It's just a regular down day. And there's some up days thrown in the mix here. So kind of a mixed bag there. Looking at solar, solar's got that little hammer candlestick as well. It looks like it's trying to coil up into something here. I don't know what yet. COPX, copper. Copper has broken its downtrend. I think I drew a line in here, perhaps. And it's looking a little bit better. We're moving sideways at the moment. Momentum sideways, right on support. So that's what copper's at right now. Again, this here is a function of fear in the market. This is what people think. Copper is a way to gauge what people think about the market, the overall economy, so to speak. If this is going higher, they think that the economy is strong. If it's going lower, copper itself, I know I'm talking about the copper miners here. If it's going lower, they think that a recession or something is wrong with the economy. Coming on down, just look at the CRB to S&P 500 just to show you guys kind of a ratio real quick. We are breaking lower here. I put a little thing here. This could be kind of a shoulder, head, shoulder deal where we break down. The recessionary fears or a recession could be coming. Maybe that's winning out. But again, remember, all of these programs, they kind of fake you out. They'll fake you out to the downside and then slingshot you higher. They get people caught on the wrong side. So just because you have a little turtle head poking out here doesn't mean that that's necessarily the case. I always wait a few days after and see where these things close out. Platinum, again, has been real strong. The platinum ratios have been favorable. Platinum to silver ratios breaking out on a long-term perspective here. It looks really good. I like platinum. Sign me up for platinum. Looking at REMX. REMX is continuing to do well. It's heading higher, finished strong, looks strong, is strong. So that is the rare earth metal ETF. I like it down here. That's me. I think it looks good to go higher. Lithium also looking strong and finishing strong. We just got to break this little downtrend here. We hit it a couple times. And if we can break through that, I think we're going to look really well. This is going to look really good. And it hasn't broken yet, though. So don't, I'm still, oh, look at my boy. My boy broke out here, guys. I like it. I got a big stake in that one. The S&P 500, SPX, rolling higher. Looking strong, is strong. We're breaking out of this little area here where we've had some resistance. Looks good. And we've broken the downtrend line. We could have some relief here. Could be a bull. This is going to be a bull trap, I think, eventually. Stronger on the NASDAQ composite as well, our U.S. composite index. We've broken the downtrend. We're starting to head higher. I know lithium, rare earth, some of these guys may latch onto it. Surprised that uranium wasn't higher either. XHB, the home builders index, just to kind of get some eyes on this. We've broken the downtrend and we are heading higher. Wait, I thought we were in a bear market for home builders. What's going on here? Why is it going higher? I do think that the home starts are going to bounce around, but I think they'll remain elevated above 1 million housing starts. Maybe even 1.4 million, which is kind of the average. If they stay above the average, this should go higher as long as they're selling homes. But homes are getting pretty expensive. I agree with that. And so are the interest rates. What are we to do with all of this information, right? You know what you do? You don't do anything. You sit there and you watch the data because this is a transition period. And we still have a supply-demand imbalance in the housing market. I think it's favorable for home builders. I think it's favorable for home prices to remain elevated for a period of time. I didn't say go higher necessarily, and I do think they will go higher, but I think the rates of change will slow down. I agree with that. I remain a housing bull until the prices start to tell me otherwise. And I'm not saying about selling homes. You're going to have to kind of sell a house if you want to sell it early. Lumber heading a little bit lower. It still looks bullish to me. This doesn't look like a bearish pattern. We got nice big up candlesticks, small down candlesticks. So lumber is still remaining elevated. It's telling us that the market is still strong. Coming on down, looking at just these, wheat is still looking weak to me. Soybeans is still looking weak. I would not be looking at these, and corn is looking weak. And again, I'm looking at the size of these candlesticks. They're massive, and there's no buying pressure to support this. So I think it's going to head lower. Copper heading a little bit lower today. It's looking like it's trying to find some sort of support here. But again, I don't see the buying pressure yet to convince me that it's a bottom yet. So that the recessionary fears is still out there, and it's still a valid fear. We updated the U.S. housing starts here, so we went down a teeny bit. We're still above the average. And again, guys, we can go and cycle up and down. It doesn't mean that every single second that we have to go up for us to be in an uptrend. Higher lows, higher highs, stick with the trend. Looking at Moo is going up a little bit. This looks a little bit stronger. I do think that this is starting to firm up for the VanEck Agribusiness ETF. I do like some of the companies in the fertilizer companies. Coming on down, aluminum was basically flat. Aluminum's just tracking sideways. Nothing really much to talk about there. The Baltic Dry Index was down a teeny bit. It looks like down 1.5%, but a lot of the companies were up. And I still like the shipping companies because they are ultra value. And again, guys, when you look at these companies, like sometimes when you buy cheap and you're early, you're going to have to wait a while. It doesn't mean that these things are just going to rocket higher. When the risk reward is favorable, that's when you cost average in. And you might grind sideways for 6 months, a year, or even 2 years. You may be real early. Maybe it's a couple of years grinding sideways before the big move comes. That's what it takes to get large gains and when you're early. It just takes a lot of grinding, bumping and grinding sideways. You may be up 25, 30, 40, 50%. You may go down 50%. These things grind if you're in these ultra volatile commodity stocks. Doesn't mean the stock is risky. It is risky to put a bunch of leverage on. I play these unleveraged. I ride it. I'm in it because I want to win it. The volatility doesn't bother me because I want to win in a big way in some of my bets. I want 30, 40, 50, 100 baggers. And I have some that are over 10, 20, 30 baggers already in oil and natural gas. I had to buy it when it was low. I had to take on some risk because some of them had some debt. And their cash levels got pretty low in some of them. But the oil price came back pretty quickly. Some call it luck, some call it skill. It's probably a mixture of both. You need skill and luck. Skill to identify the opportunity, luck that the opportunity plays out. But that's what I've got today, guys. If you guys want to join the website, Platinum membership in the description link below, that's definitely what I would join. I think there's a lot of valid things to learn on the website. It's basically an area where I accumulated a lot of information, put it to you guys, and you can learn it. You're going to have to learn this stuff in order to make a lot of money. And you have to look at these things deeper than just as them being stocks. You have to look at it like, what are the leading indicators? And then these stocks kind of follow it. And it's the companies that follow it. You want good, solid companies, ones that have good assets that may have took on a little bit too much debt, and then they got hammered to the downside. And then when all this unwinds, that's when the big moves come. It's the companies that people hate the most sometimes do the best. Sometimes, not all the time. And that's because when the prices get high enough, their multiples, the leverage they have to the price moves, really start to move. And what I did with a lot of the picks on the website is I found where the leverage is in all the sectors. That's what I did for everybody. That's what my portfolio is comprised of. And then I've got a larger portfolio playing the precious metals game. I buy lots of precious metals, physical metals. Get me out of the system. I'll play that game. So I'm playing multiple games all at the same time. Some very low risk. That's what I've considered the physical precious metals, super low risk. Good returns here. And then I've got the swing for the fence type moves where I'm spreading it across a whole bunch, and I'm trying to win big in a couple of them. Sometimes they all win big. If that's the case, and we come into some large commodity bull market, which I think is the case, and I'll do another video. I'll release it tomorrow, perhaps on what I'm going to talk about is the I'm going to talk about the PPI to CPI ratio. And when that is favorable in a certain direction, that usually means we're in an inflationary environment. So I'll talk about that in our next video here, and I'll release it probably tomorrow. All right, guys, give me a thumbs up for the content. Subscribe to the channel. Subscribe to the website if you'd like to support my work. And we'll catch you next time. This is Finding Value.